Right. So that's exactly right, Sarah. He is showing his hand a little bit that there's going to be more, that there could be more. One would be something that would be quite new for the Fed, which is this idea of yield curve control. And that is something that the Fed has not tried before, but he was quite upfront describing that it's something that the Fed is looking at and that the Fed has started to analyze. That is a pretty good indicator that the Fed is going to start rolling that one out as soon as it feels that it's ready. Forward guidance is something that the Fed has played with a long time. Of course, we saw the use of forward guidance in the recovery to the financial crisis, and that's essentially figuring out what you're going to signal to markets regarding how long you're going to keep your Fed funds rate at the zero lower bound. And it signals to markets, hey, we're going to keep it this low until we get to a certain level of employment or perhaps for a certain period of time. So those are the two tools that he has previewed, and I think that was intentional. And we'll see exactly when he actually decides to use them.
Paul, another one of his lines was, we'll put these emergency tools back in the toolbox when the crisis is over. Just how hard is that going to be?
I think it's going to be difficult. I think he needed to say that institutionally, but they're not thinking whatsoever about putting them back in the toolbox now. In fact, if I had to summarize what he had to say today in one word, is he committed to being nurturing of the recovery, nurturing in every respect. And I think that was his key message. And it was for Main Street more than Wall Street. He wants Main Street and also Congress to recognize he's going to be nurturing, not in the just weeks and months, but years ahead.
We also got the forecast from the Federal Reserve, Sarah. I mean, they're clearly expecting this to have a big impact, down 6.5% for GDP this year, rebounding next year. The potential growth rate, how the economy can potentially get back to trend, is pretty much where it was, I think 1.8 or 1.9% before this crisis. Is that realistic to think that there's not going to be temporary damage to growth?
Well, I think he's conceding that there is going to be temporary damage. The question is, how long is temporary? He would like to think that in the longer term, that temporary damage will get addressed. He would like to see it addressed, obviously, through some combination of a targeted fiscal policy response and, of course, the extraordinary measures that the Fed is taking now and is going to continue to take. But I think there is a sense that there is going to be some long-term damage here. He wants to signal that. He wants to signal that so that he rationalizes why the Fed is going to be staying engaged for quite some time.
Paul, do you think he's saying that just to be on the safe side, or he really believes it? And what was your own take on the jobs number we got last week, and whether or not that sort of positive surprise that was within the number can continue?
I like how Chair Powell addressed the whole issue of the jobs data. We knew that there was going to be a huge bounce off the bottom by reopening. We didn't know which month it was going to come, and that it will proceed through the second half of the year. And I think he is welcoming that. He wants to nurture that. And on the question of longer-term damage, he has a huge amount of concern on that. But that's not really a second half of the year question. It's a longer-term question, and it's really a question for Congress because, again, he reiterated he's in the lending business, not the spending business. And to the extent that you need grants and programs that involve fiscal spending, he was openly encouraging Congress to do it, stressing that he will be super accommodating for as long as necessary.
Sounds like, Paul, this is one of those news conferences that if you were sitting with us on set in normal times, you would have been applauding. You sound happy.
Oh, absolutely. I think Chair Powell is doing a fantastic job, and particularly in the context of being part of overall government. We've collapsed that church and state separation between fiscal and monetary policy, and Jay has been fantastic in articulating that.
Paul McCulley, Sarah Bloom Raskin, thank you both for your reaction.